Welcome, everybody, and thank you for joining us. My name is Sean Moss with Down Payment Resource. We also have several members of our team with us, Will, Melinda, and Tracy in the background. They will be answering questions as we go, so keep this interactive. Use the Zoom Q&A feature if you have any questions, and they will be reacting as we go. We'll leave time at the end for Q&A as well. So today we are talking about the basics of homebuyer assistance programs. We call it DPA 101. This is designed to give you confidence and competence talking about down payment assistance programs as we see more and more demand for them among aspiring homebuyers, which creates demand among you, the real estate agents and loan officers who will ultimately serve them and assist them in their homeownership journey. So we'll give you a little background, sort of high level about what's out there in terms of homebuyer assistance, namely down payment assistance programs. And then we're going to break down the three most common types of homebuyer assistance and look at universal requirements, what's common amongst them, how do they differ, and we'll look at some unique scenarios in which there may be some additional opportunities. So all of this is designed to help you with just sort of a foundational understanding of these programs and opportunities that they present. So again, my name is Sean Moss with Down Payment Resource, and our team is in the background ready to answer your questions. We are a national database and matching engine of all of the actually about 2,300 homeownership programs across the country. And our goal is to help agents and loan officers be the down payment hero to buyers. In order to do that, some of the many things that we do are integrate into MLSs and property listing data, so that agents, if you are a member of one of our MLS partners, which we will identify here shortly, you have access to all of the down payment assistance programs available for a given listing inside your MLS, integrated into your property listing data, as well as Down Payment Connect. Now, we also have a version of Down Payment Connect available for loan officers and also for real estate agents who are not members of one of our MLS partners. That tool is designed to help you educate and connect with aspiring home buyers outside of the MLS in your own marketing, be that on the web, on social media, your email, your blogs, and so forth. So that's what we do, all of which is designed to help you connect home buyers to the down payment help they need. So today, what we are discussing are loans, grants, tax credits, affordable first mortgages, and other programs that can help eligible homebuyers achieve the down payment faster, cover closing costs, and ultimately get into a home sooner than they thought possible, or sooner than they might have otherwise without the assistance or awareness of these programs. So big picture, what's out there? Of the 2,300 some programs across the country, the vast majority of them are down payment or closing cost assistance. 74% of homeownership programs offer some form of down payment and or closing cost help. Of those, 86% of them have deferred payments, meaning there is no monthly payment on that down payment assistance loan. 58% of those DPAs are forgivable, either in part or in full at some point in the future. 52% of these DPAs are both forgivable and offer deferred payments. Now, those are all down payment loans, right? Then there are the down payment assistance loans that have a monthly repayment. So you get the mortgage at closing, you get the down payment assistance at closing, and you pay monthly on both of them. On the other end of the spectrum are grants. A grant is a true gift at closing, no second loan, no additional lien on the property. So that's the down payment assistance part of homeownership assistance. However, there are some other types of help out there for buyers. Particularly, 11% of these programs are affordable first mortgage loans, which typically come from your state or local housing finance agencies and can offer benefits like below market interest rates, reduced mortgage insurance pricing, or higher LTV financing. There are also, in some states or some markets, mortgage credit certificates. That is a tax credit, not at closing assistance. And those three categories we're going to break down in more detail because they represent the most frequently used and most common types of homebuyer assistance. There are some other forms of help out there for example, matched savings programs or individual development accounts, housing choice vouchers, and so forth. We're going to focus less attention on those today because we want to touch on the most common types of homebuyer assistance that will be available in your market to your buyers that can help you create more purchase transactions. Now, that's big picture. These programs also are available across the country. There are over 2,300 programs. They are in every state because every state has at least one state housing finance agency who offers a wide array of programs. There is literally no market in the country that is not covered by some kind of down payment assistance or other homebuyer help. And of course, we hear, my market is too high cost, my market is too rural, so there can't be any programs here. Not true, and we're going to dispel that myth as we go. These programs are market adjusted in terms of income limits and purchase price limits. The state agencies cover all the rural markets as well. So while there may be fewer programs in a rural market, there are still plenty available. So programs are everywhere in every market across the US. And they come from, obviously, your state housing finance agency. Every state has at least one. There are also local housing finance agencies. So if you hear the term bond program, that's typically where those programs come from. Although they don't just do bond programs, they have other ways of funding DPA. But you also have cities and counties or other municipalities that may offer down payment or closing cost help. Sometimes employers will fund a down payment assistance program to help recruit or to retain employees. There are housing nonprofits that may offer services like homeownership counseling, homebuyer education, and often down payment assistance to help buyers in their local market. And we also have local housing authorities. There are community development financial institutions, or CDFIs, that offer similar programs. The Federal Home Loan Bank Network funds down payment assistance through their member bank network. There are community land trusts all over the country and more. So that represents probably most programs, but these programs are all different. We track and monitor that. These are most or some of the kinds of organizations or agencies that these programs come from. So let's discuss a few trends here. We have seen lower down payment assistance volume in 2022, but the market has cooled off as well. So that's reflective of the whole purchase market cooling off. That's after two record years, 2020 and 2021, where housing agencies in particular saw record volume of down payment assistance usage and record purchase transactions. But that was also reflective of the market at the time. So while that's happening, we are also seeing more down payment assistance programs hit the market, new to market, as the market maybe cools off a little bit, but we're still seeing more nonprofits, municipalities, states, and so forth, trying to come up with more ways through more down payment assistance programs to help more buyers into the market. Demand among buyers is through the roof. We've seen we believe more and more buyers becoming aware of these programs through ours and many other people's efforts. And that, as we mentioned earlier, bubbles up as demand for down payment assistance amongst you, the real estate agents and loan officers who are ultimately going to help them to the finish line, to closing. States and local programs continue to launch new programs and continue to try to increase assistance amounts, income limits, and purchase price limits to adapt to appreciation, to adapt to today's prices and incomes, and to, again, try to keep the door open to more buyers to be able to access help to get into a home. About 84% of all of these programs are funded and available right now today across the country. That has been a super consistent number for several years because some of these programs are seasonal. However, if you look at your state, for example, they are basically perpetually funded. So given that there is some seasonality with some of these programs, they're never all funded at the same time. But part of what we do is track and monitor and keep current details about whether or not they have money, their income limits, their purchase price limits, how many dollars you get, if or how that's repaid, and so forth, so that you don't have to worry about monitoring those details. you can focus on engaging buyers in conversations about these solutions. All of this is to tell you down payment assistance is still available. It is not going away. And clearly there is increased attention on affordability and on down payment assistance programs as a solution for affordability challenges. So to reiterate, for the last 4 quarters in a row, we have seen an increase in the number of available down payment assistance programs across the country. Markets nationwide continue to see new DPA or other homeownership assistance programs, again, to try to keep the doors open for more buyers. So what are some of the universal requirements across all of these programs? In a moment, we're going to start to break down the down payment assistance versus the affordable first mortgage versus the mortgage credit certificate. But across all of them, there are some universal requirements. Specifically, these programs are only for the purchase of a primary residence. You cannot use these programs to purchase a second home, a vacation home, an investment property. They are for the owner occupant who will live in the property they're buying with the down payment assistance. Most of these programs also require some sort of minimum cash investment from the buyer. That can range or vary by program and range from $500 to $1,000 to 1% of the purchase price. That's going to depend on the program. And part of that investment on the buyer's behalf is a home buyer education class. Most DPA providers require that the buyer go through a home buyer education class where they will learn not just about the home buying process, but about the obligations of home ownership as well. We'll talk more about home buyer education as we go here. And then lastly, we are not talking here about cash buyers. We are talking about buyers that are financing the purchase of their home. So of course, they must qualify for a first mortgage and in parallel, utilize any down payment assistance or other assistance programs available to them. So that leads us to breaking down the 3 most common types of homebuyer program. We saw earlier, down payment assistance represents the vast majority, 74% of all of these homebuyer programs, but there are some very common, very useful, very valuable, affordable first mortgages from your state housing finance agencies and sometimes from local housing finance agencies. So we're going to break down the benefits of those. And then there are some states where there are mortgage credit certificates available. Those are tax credits, not at closing assistance like the other 2 here. And we're going to break those down and talk about their unique value as well. So let's begin that process. We're going to start first with down payment assistance. So we've established that is the most common type of homebuyer program, typically funded by nonprofit or government agencies or funds, sometimes by employers, and can offer several to tens of thousands of dollars in assistance. And we covered this a bit earlier, but just to reiterate, there are essentially 4 types of repayment structures for down payment programs. Now, of course, there are nuances to even those, but big picture, it's either a grant or a loan. So some programs are grants. That is a true gift at closing, no second mortgage, no second lien on the property. And if it's a loan, it might be repayable. So as we go down on the left here, the second option, a repayable second, is a down payment assistance loan that you get at closing with your mortgage, and you have a payment both on the mortgage and on the down payment assistance. That monthly payment starts immediately, just like the mortgage. However, some down payment assistance loans will defer payments. So a silent second is a DPA where you get the down payment loan at closing, but you don't have to make monthly payments on that loan for some period of time, often the life of the first mortgage that it came with. So that basically means you typically wouldn't have to make a payment until you sell or refinance or move out of the home that you bought with that DPA. And then some programs, more than half, are forgivable. So it is a loan at closing, but the debt, you could say, essentially becomes a grant over time or at some point in the future by way of forgivability. So I'll give you 2 examples. One would be, as long as you stay in the home for 5 years, the DPA would be forgiven incrementally at 20% per year, each year for the first 5 years you're in the home. So if you stayed in the home for 4 years, 80% of that DPA would be forgiven. If you stayed in the home for 5 years, it would be completely forgiven. That would be one scenario. Another would be you have to stay in the home for, let's say, 7 years. And at the end of the 7th year, the down payment assistance would be completely forgiven. Now, of course, every program that offers forgivability can vary, but those would be two examples of how that might work. So let's talk about eligible uses of these funds. Obviously, most of these programs will allow you to use the money for down payment. Some of them are uniquely closing cost grants or closing cost assistance. But some of those down payment assistance programs will also allow their funds to be used towards certain closing costs. Some fewer of these programs may allow their funds to be used to cover certain prepaid expenses. So, for example, prepaid interest. And then an even smaller few may allow their funds to be used for repairs or rehabilitation of a property. So, for example, making accessibility improvements. So those are the common eligible uses of these funds. Now, again, we're looking at sort of broad, basic, foundational, or fundamental understanding of how these work, right? There are always outliers and nuances, but we want to get a good foundation for you. So let's talk about first-time homebuyers. Now, this is universal across all of these different program types, but we'll address this here with DPAs. It is a myth that these programs are only for first-time homebuyers. In fact, about 38 or 39% of all of these programs do not have a first-time homebuyer requirement. And it's also important to acknowledge the definition of a first-time homebuyer when it comes to down payment assistance. If you have not owned a home in the last 3 years, the most recent 3 years, you are a first-time homebuyer for the purpose of down payment assistance. That means that some DPAs might be available not just to first-time home buyers, but also repeat buyers or even current owners in many circumstances. So remember the 3-year rule. You are a first-time home buyer for the purpose of down payment assistance if you have not owned a home in the last 3 years. That will often look like if you have not had titled interest in a primary residence in the last 3 years, but the definitions can vary. Nonetheless, the 3-year rule is basically universal across all of these programs. So let's recap some of these terms here. We've talked about grants. That's a true gift at closing. We've talked about forgivable programs. We've talked about deferred payments on some of these programs. The period over which a program is forgivable or deferred would be called the affordability period. If the program is not a grant, then there will be a second lien on the property because there will be a subordinate loan or second mortgage on the property. So be aware of those terms. Often, you can kind of tell we're using the term down payment assistance very broadly to cover a lot of actually different scenarios here, different types of programs and repayment terms. But these are some of the more nuanced terms that you might hear, and good to know if a program defers payments or if a down payment assistance program is forgivable. All right, so what are some of the basic eligibility requirements? Now, these also would apply across affordable first mortgages and mortgage credit certificates as well, but we'll go ahead and address this here with the down payment assistance category. So most of these programs have income limits, often based on household size and typically based on area median incomes. So as you can imagine then, the income limits in a higher cost market are going to be higher for these DPAs than they would be in a medium or low cost market. So they are market adjusted. Same thing with purchase price limits. Most programs do have purchase price limits, but again, they're going to be market adjusted to the median home prices or higher in a given market. So we see purchase price limits of, 6, 7, 800,000 in New York, Southern California, Seattle, but they're going to be lower in Tampa, Atlanta, Reno, Phoenix, and so forth. You get the point. So most programs have purchase price and income limits, but they are market adjusted. They will reflect higher income and price limits in higher cost markets. So even if you're in a high cost market, yes, there are programs. And while they may have income and price limits, they are market adjusted to keep the door open to more buyers in your market buying at roughly median purchase prices. Then, of course, location is a critical factor in determining one's availability or eligibility for down payment assistance. So for those of you who are real estate agents, if you are a member of one of our MLS partners, then you will see this down payment button, the $ with the check mark. You will see that on eligible listings inside your MLS. We'll put up a list of our MLS partners here shortly. But if you see that button on a listing, it means that property is eligible for down payment help based on location and price and essentially property type. So we know based on the address, what state, what county, what city, maybe even what tract or zip code that program is in, and which programs are available, up to the purchase price of that listing, or based on versus rather the purchase price limits of the programs available. So location is a critical factor. As you move across municipal boundaries, you will see that the list of available programs changes. One city may have a program, and if you move across the city boundary to another city, then that city may have their own program, each of which is only available in their respective city, right? And then the county may have a program, but if you cross county lines, then you may see a different list of local programs. So location is a big factor, as is FICO and credit. So we mentioned earlier, we're not talking about cash buyers here. We're talking about buyers that are financing the purchase of their home. So they have to credit qualify. And a lot of these programs may have their own FICO minimums. Typically, that's going to be 620 would be about the lowest that most programs would go, maybe 640, 660. Depends on the program. Some DPA programs will simply defer to the first mortgage. But if they do enforce FICO requirements, that's generally the floor that you're going to see. And of course, the buyer has to credit qualify for the DPA just as they do for their mortgage. Now, homeownership history, we've essentially covered. Basically, these programs do not all have a first-time homebuyer requirement. You're not limited just to first-time homebuyers, but that depends on the program, and that's going to differ by program and by market. And of course, remember the 3-year rule. A client of yours is a first-time homebuyer for the purpose of down payment assistance if they've not owned a home in the last 3 years. And then military service, either veteran or active duty, as well as profession, can impact your eligibility for down payment assistance as a home buyer as well. But we're going to talk about that a little bit later when we talk about some sort of special circumstances. So what are the advantages of a down payment assistance program? The obvious one that we all immediately recognize is that we're lowering loan to value, right? Bigger down payment, lower loan to value. But let's think about some of the other benefits that start to accrue or compound as we do that. So if we're putting down a bigger down payment, we're lowering the loan to value, we're lowering the loan amount, and that's lowering the mortgage payment, which reduces qualifying ratios. Qualifying ratios, we can make a direct impact on that with down payment assistance. And that's an often underlooked or underappreciated and overlooked benefit of down payment assistance programs. As you lower the loan to value, you may also open up the door for a better first mortgage scenario. So consider this. You've got a client that's on the cusp of getting FHA approved, and we find out that there's a down payment assistance program that can inject $5,000, $10,000, $20,000 into the transaction and reduce their loan to value to, let's say, 95% instead of 96.5%. Now you're looking at conventional financing instead of FHA. You don't have the upfront mortgage insurance on conventional loans, and you have reduced monthly mortgage insurance. So all of this again compounds that monthly payment reduction, which further reduces qualifying ratios. And then from a cash or a liquidity perspective, all of this these programs can help supplement cash to close. When we do that, we're helping the borrower or the buyer potentially retain more of their savings, more of their liquid money, and all of this increases the purchasing power of that buyer's income. So if we hold their income steady and we start to tack on all these other benefits, we are actually increasing the purchasing power of that buyer. And one more comment about liquidity, that can be a big deal. We all want to make sure that we're putting people in homes to be successful homeowners, not just to become homeowners in that moment. So we want to ensure long-term success and keep them in the home. We've seen studies, especially from some large banks in the country, that looked at the effect of liquidity on long-term mortgage payment success. Having just 1 to 2 months in reserves has a drastic impact on reducing mortgage delinquencies. And if you get to 3, 4, 5 months in reserves, you see the delinquency rate sort of flatten out at its baseline. So just having a little bit of mortgage payment in reserves makes a big difference on long-term sustainability of home ownership. All right, so let's wrap up DPAs by talking about homebuyer education. Most DPA programs do require that the buyer completes a homebuyer education class. Typically, this is something like 6 to 8 hours of HUD certified homebuyer education content. Increasingly, there are online options. In fact, at this point, most DPA providers will offer an online option for your client to complete their homebuyer education class faster and at their leisure than, for example, having to wait for a Saturday in-person class. That may or may not come around, but once every couple of weeks or something. So keep in mind, if you're using a down payment assistance program with a client, don't delay on the homebuyer education class. It's often required. They can do it online, and it helps make a better prepared client for you, while also teaching them about the obligations and the pitfalls of long-term home ownership so they can train up successful homeowners down the road. So we're big proponents because of both the short and long-term benefits of those classes, but the certificate of completion is good for typically a year. So there's no reason to wait. If you have a client that's interested in or would benefit from or needs down payment assistance, get the homebuyer class done up front. There's no reason to wait. That certificate of completion is good for a long time. So that was down payment assistance programs. Now we're going to get into the second category of the most common homebuyer programs. That is the affordable first mortgage. These typically come from your state housing finance agency. Sometimes there are local housing finance agencies that offer these as well. The features might be reduced interest rates, expanded first mortgage options. Some of these housing finance agencies can offer mortgage products that are not available in the market at large because of their unique relationships with, Fannie, Freddie, and so forth. Some of those mortgage options can offer reduced mortgage insurance costs, and many of them can be combined with either down payment assistance options from that same agency or perhaps layered with other agencies. Or if there are mortgage credit certificates available, sometimes you can leverage the mortgage product with the tax benefit of a mortgage credit certificate. So the benefits of these affordable first mortgage programs would be reduced buying costs, again, lowering monthly payments. So if we're getting reduced mortgage insurance and a better interest rate, again, we're lowering monthly payments. And if once more we hold income steady and we reduce buying costs and monthly payments, we're increasing the purchasing power of that buyer's income. Just like with down payment assistance, those benefits can help expedite home ownership and get your clients into a home sooner than they thought they could have. So let's talk briefly about mortgage credit certificates. There are plenty of states that offer a mortgage credit certificate. There are some that do not. You may or may not have one available in your market. Our platform, whether it's through our partnership with your MLS or through downpaymentresource.com, will tell you if there are mortgage credit certificates in your market. This is not at closing help. This does not happen at closing. Now, you do have to get all of these programs at closing. You cannot retroactively go back and get down payment assistance, nor can you retroactively go back and change your mortgage or get a mortgage credit certificate. But an MCC is a federal income tax credit. So in addition to the standard mortgage interest deduction, the MCC allows you to claim a certain portion of your mortgage interest as a tax credit. And it's also good for the life of the mortgage that it came with. So you get a mortgage, you have it for 10 years before you refinance. That mortgage credit certificate is good every year for the life of that loan, every time you file your federal income tax return. So it's an annual tax benefit designed to offset the cost of mortgage interest by offering a tax credit in return. And you can still deduct the remaining mortgage interest as you would if you just through the standard mortgage interest deduction. So the benefits then become reduced income tax liability, increased qualifying income. So let me explain that. Some mortgage credit certificate providers will allow the lender to take the value of that mortgage credit certificate tax credit and divide it by 12 and apply that as an increase in qualifying income. That means you get increased qualifying income for having the mortgage credit certificate, and you still get all that tax benefit every year you file your taxes. And then some mortgage credit certificate providers will allow the buyer to will reissue to the buyer that same mortgage credit certificate through a refinance in certain circumstances, allowing them to retain the tax benefit of that MCC. So I will briefly explain how this works. I'll keep this simple. I'm not a financial advisor or a lawyer or an accountant or a tax advisor, but generally speaking, this is how an MCC works. Let's assume a $200,000 home price and a 4% interest rate to keep the math simple. That would be $8,000 in interest paid in 12 months if they paid the first 12 months when they bought the home. Or sorry, paid 12 months in the first year that they bought the home. Let's say the mortgage credit certificate allowed you to claim a credit for 25% of the mortgage interest paid. We paid $8,000 in interest, so that credit would be worth $2,000, 1/4 of that, right? What about the other $6,000 in mortgage interest? You still then get to claim that as a standard itemized mortgage interest deduction, but you got that credit first. The credit is a dollar for dollar reduction of your tax bill. The rest of it, the mortgage interest deduction, is deducting from the taxable income, right? So the tax credit is obviously a more advantageous tax benefit. So anyway, that's basically how an MCC works. With that, let's cover some unique features and scenarios in which there may be additional opportunities, programs, benefits, and so forth. Some DPA providers identify targeted areas within which they offer some unique benefits, which would commonly be a waiver of any first-time homebuyer requirement if there was one, more down payment assistance dollars in those targeted areas, higher income and purchase price limits in those targeted areas. But those areas would typically be bounded by a census tract or zip code, sometimes an entire city or even sometimes an entire county. But there could be interesting benefits in those targeted areas. So if you have a client that's buying a home and you or your lender identify that that is a targeted area for a specific or a couple of DPAs, take a look at the extra benefits because it can be a big deal. And we mentioned earlier profession and military service. So let's touch on profession first. There are in some markets what I would broadly call hero programs, which offer unique benefits or unique programs even for those employed in certain professions, certain core service professions typically. That would be education, law enforcement, first responders, healthcare workers, sometimes employees of a municipality. So if you are working with clients or have referral sources that provide you clients in those professions, then be aware of any hero programs in your market or a teacher program or a police officer program or something like that, where there may be some unique options for that buyer that are not available for the general public. Now, anybody, regardless of profession, can apply for any DPA. And then there are sometimes these additional DPAs for people in those specific professions that may offer added or unique value. So it doesn't mean you have to be a teacher to apply for a DPA, but if you're a teacher, there may be an additional teacher DPA out there. It just depends on what's available in your market. And then regarding military service, for veterans and or active duty, there are often some additional benefits. Most state housing finance agencies will waive the first-time homebuyer requirement for veterans or those that are actively serving. Often those DPAs can be combined with VA loans. So one might ask, why would you need down payment help if the veteran is eligible for a full VA loan? Well, they still have to cover closing costs. And if you've got a DPA available that can help with that, not only can you help them cover the closing costs, but then they don't have to ask the seller and they can offer a more competitive bid for that property. And then, of course, there's the obvious, why not offer increased equity? So yes, you can get the VA loan and you don't necessarily need a down payment, but if you had one, wouldn't that be a great way to say thank you for your service? So if you are working with veterans, or again, you have referral sources that are bringing you veteran business, be aware of any opportunities that are unique to them in your market. And as with profession, any veteran can apply for any DPA, right? Doesn't have, you're not just limited to a military down payment assistance program. But if there is one, it may offer some additional or unique value that's worth looking into and being aware of. So given all that, now having broken down the 3 most common types of homebuyer assistance, let's talk for a moment about how to access this information. Anybody at any time can go to downpaymentresource.com and do a search anywhere in the country to find out which programs and how many dollars you might get for wherever you want to buy a house. So that can be your client, that can be you, that can be a loan officer, that can be a housing counselor. Anybody can go to downpaymentresource.com, do a search anywhere in the country, and see what type of homebuyer assistance is available. Then you can see which programs are out there, who the lenders are, how to take the homebuyer education class, and information about that program. If you are a real estate agent and you are a member of one of these MLSs, so if you were distracted for a moment, take a look here, see if your MLS is on the screen. If you are a member of one of these MLSs, then you have access to down payment resource in your MLS, plus a dashboard of additional tools that we provide to you as part of our partnership with your MLS. So San Antonio Board of Realtors, our newest partner, HAR in Houston, Real MLS in Jacksonville, California Regional, Greater Alabama in Birmingham, Spokane Association in Washington, MIBOR in Indianapolis, Kansas City Association. That's not inside the MLS, but they are a partner, and you have a widget, as does the California Association of Realtors, and the New York Association. Northwest MLS in Seattle, Central Virginia in Richmond, RealComp in Detroit, One Key in Greater New York City and up the Hudson Valley, Greater Lansing in Michigan, FMLS in Atlanta, North Star in the Twin Cities, MLS PIN in Massachusetts, Stellar in Florida, and Austin Board of Realtors in Texas. If you are a member of one of those MLSs, your MLS is a partner of ours, and you have, if that's an MLS, then you have access to these down payment buttons on eligible listings inside your MLS, and you can click on those buttons to see how many and which programs are available for a given listing, as well as details about those programs, including the most critical next steps. Who are the lenders that offer them? How do you get the homebuyer class done? Links and contact information for the program provider, and the basics of the program. So if you're a member of one of those MLSs, look for these buttons on listings. Your clients will see them too through your client portal, whether that's Collab Center for Paragon users, One Home or Client Portal for Matrix users, so forth for Flex and any other consumer experience. Now, if you are a member of one of those partner MLSs, you also have Down Payment Connect for free. If you're not a member of one of those MLSs, we have a subscription version of Down Payment Connect, and we can point you to that here in just a moment. Agents and loan officers, if you are using Down Payment Connect, it is a personalized lead generating landing page that you can give to consumers so they can search for down payment help where they want to buy a home, and connect back to you and only you to continue that discussion. There's no limit to the traffic or leads that you can get from your page. Loan officers, if you are subscribing to the loan officer version of Down Payment Connect, then you also get a detailed directory of all of the programs in the states for which you subscribe to the tool. And you can customize which programs display to borrowers, because we know that you can't promote programs you don't have access to. You also get a back office eligibility widget so that you can do ad hoc searches and compare results. So you can explore eligibility for a client or run scenarios yourself. If you are not a member of one of our partner MLSs and you wish to subscribe to Down Payment Connect, then you can go to downpaymentresource.com/DPC and check out the real estate and the loan officer options. If you are a member of one of our partner MLSs, please do not pay for Down Payment Connect. You already have it as part of our partnership with your MLS. We will put that list back on the screen here shortly. What you get with Down Payment Connect is your own unique landing page where buyers complete a program search, generate leads to you. You can tap into new and growth markets, use it in all of your digital marketing, including website, social media, email marketing, email signature, blog, text campaigns, and so forth, and engage with and educate new and aspiring homebuyers. Just to be clear, with Down Payment Connect, whether you have it for free through your MLS or you subscribe to it through us, you are not paying for leads. You are using the tool to generate your own leads to supplement your own marketing with a new, unique way to compel consumers to dialogue with you, to compel them to engage with you. Again, free for members of our MLS partners, with a paid version available for loan officers or real estate agents outside of our MLS partner markets. Nobody else gets the leads. They are yours and yours alone, no matter how you get Down Payment Connect, free or subscribed. No one else is copied on those leads. They are not sold or resold elsewhere. They are yours and yours alone. Okay, so another way that you can spread the word here or learn more about these programs is through our Down Payment Insiders group on Facebook. This is a group of loan officers, mostly real estate agents, but loan officers, DPA providers, housing counselors, and so forth across the country that come here to share best practices, working with DPAs, working with first-time home buyers. There's a lot of networking happening in the Down Payment Insiders group. In fact, I'm seeing some of that in chat, but Down Payment Insiders is the place to go. There are over 10,000 of your peers across the country in that group. We see them sharing stories. We see them listening in. Our marketing team will post questions and get chats and dialogues going. We see people sharing marketing content, marketing tactics that work for them, sharing challenges and lessons learned and so forth. So we encourage you to go to the URL at the bottom of the page here, facebook.com/groups/Down Payment Insiders, and join that group. And that's a great place to find loan officers in your market. If you're a real estate agent looking for an LO that does DPA, or if you're an LO that does DPA and you're looking for real estate partnerships, this is a great place to meet those that are in need of your services. And I'll give you a case study here. Amber was a new agent in Florida, member of Stellar MLS. And when she got into the industry, she found that her peers were struggling to get clarity and answers about down payment requirements and about down payment assistance programs. So she took it upon herself to partner up with lenders who worked with DPA programs and understood them and were trusted DPA advisors. And she also took it upon herself to learn a little bit about some of the programs for down payment help that were available in her market. And she leveraged those two things to grow her business, working with first-time homebuyers who were using down payment assistance, all because she saw misperceptions in the market and wanted to tackle those challenges. So we give you that as one example of how to leverage down payment assistance programs. And if you wish, then Down Payment Connect and our other tools in order to help grow your business, reach more buyers, educate those buyers about true down payment requirements and solutions to down payment obstacles, and close more deals. And I'll leave you with this: DPA customers become customers for life. We have another webinar dedicated strictly to Down Payment Connect to share, creative, unique marketing stories. And one of our favorites is when real estate agents and their loan officer partners share stories about clients. So an example would be, post on Facebook to the rest of your consumer audience the story of a recent client. And if you can get permission to use names and some of the details, even better, right? But tell consumers the story of one of their own peers that just got into a home and got down payment assistance, and you coordinated all of that to make it happen. That's a great way to engage a consumer. but someone that you help like that is going to immediately start referring peers to you, and they're coming back to you for repeat business if and when they're ready. So remember, DPA customers become customers for life. With that, we have a large audience, and we always like to leave room for Q&A. So I'm going to put our contact information up on the screen here. If you have other questions or want to wait till after the webinar, then you can email us at info@downpaymentresource.com. I'm going to leave that on the screen here, and I'm going to go to Mel and Will and Tracy in the background, who have clearly been answering a lot of questions. Mel, I'll start with you. Any trends that you're seeing? Anything we need to address?
Yeah, hey, Sean, definitely a great audience, lots of really, really good questions. I'll just send out that reminder once again, because we've had this question several times, that we did record the session, and I will be sending that out most likely tomorrow to everyone that registered, along with the presentation slides. So you guys should get that tomorrow. If you don't, let us know. And then the one question, I guess I've had a few, Sean, that have been asked multiple times, but the first one I've gotten more than once is, can these programs be used when buying manufactured homes?
Yeah, that's a good question. That does depend on the program. And Mel, you're closer to that data. You might know off the top of your head, but I believe something like 27, 28% of all these programs do allow manufactured homes, and it may even be higher now.
I think I was just about to look it up, Sean, but I think it is 28%. I think you're right.
Okay, so yeah, more than, whoever asked that, more than a quarter of these programs do allow manufactured homes. I will say it's probably more common on the East Coast, Southeast, and across the South. But that doesn't mean there's not a program or two in your market. But yes, absolutely. As long as it is manufactured and permanently affixed to a foundation, then yes, there are options out there for down payment assistance.
Thanks, Sean. And then forgive me if you addressed this and I might have missed it, but we have definitely had a lot of networking going on in chat. And a question that I have come in contact with multiple times is, how do you find lenders that do DPA?
So let's look at that. Let's look at it from a few different perspectives. First of all, anybody can go to downpaymentresource.com. And in fact, let's go back a little bit here. Anyone can go to downpaymentresource.com, do a search anywhere in the country, find out what's out there, and from your list of programs, explore the details of those programs, the first of which is the provider's published list of participating lenders. That's one way. Go do a search, find a program, see who the lenders are. Another way is ask your peers, ask your broker. Do they work with a loan officer that offers down payment assistance programs that they trust with a first-time home buyer or whomever using a DPA, and that offers a wide array of down payment assistance options? You may find a partner through your broker or your peers. Also, talk to the DPA providers. We give you their contact information, whether it's in a Down Payment Connect lead or you click the DPR icon from an MLS. Here's our MLS partners. Or you are doing a search on downpaymentresource.com. We show you the list of lenders as published by the provider, but we also give you the program provider's contact info, and you can call them and just ask them, hey, who are some loan officers or lender companies that do a lot of volume with your program in my market, in my part of the market, and get a referral from them. A lot of especially the state agencies that offer down payment assistance, many of them now publish a list of their top producers. I can guarantee you those are the loan officers that obviously do the most volume, are likely very good at down payment assistance, at least that program, right? And probably want that business. So that's what you're looking for. Who offers the programs and is good at them and wants that business from you. And that ought to be most loan officers these days. So, and lastly, I'll show you, let's go back to our Facebook group. You can all go join this Facebook group, the Down Payment Insiders. Lots of networking happening there, in addition to the learning, in addition to sharing best practices. But that is a great place to go, where there's already a very large audience of real estate agents and loan officers, and start connecting with people there. So Mel, I'll leave it at that. And what else do we have? Will, any questions you want to address?
Yes. One of them being, can the buyer, this is with respect to uh, funding a closing, I guess, post closing, but can the buyer later add someone to the title, for example, like a new spouse or a child, without um, triggering any repayment of the DPA? Um,
Interesting. That's a good
yeah.
question. I think I'm pretty sure the answer is yes. Um, if they transferred the title, then that would be different. Like in a refinance, right? You sell the home, you transfer the title to somebody else. I don't think adding someone to title would trigger repayment of a down payment assistance program. So I think you're safe in that scenario as long as they're not transferring the title to someone else.
Okay. Thank you for that. And there was another question, kind of going back to the slide regarding mortgage insurance. They wrote, when you say that it can improve mortgage insurance, are you talking about the additional insurance that comes with putting less than 20% down?
In a way. So here are some of the ways that a down payment assistance program can impact mortgage insurance. I gave you a scenario earlier. Imagine a borrower that is trying to get FHA approved. They got to have 3.5% down. They're going to have an upfront mortgage insurance premium, and they're going to have monthly mortgage insurance. That monthly mortgage insurance on an FHA loan is more expensive than it is on a conventional loan. So if you can get them enough down payment to get to, let's say, 95% LTV, and they don't have to do FHA, now you've gotten rid of that upfront mortgage insurance premium. You will now be able to take advantage of cheaper conventional monthly mortgage insurance. And depending on LTV and FICO, there are other ways that could go down. That's one way that you can impact mortgage insurance costs with a down payment assistance program. Another way is some of your state housing finance agencies have first mortgage products that offer reduced mortgage insurance costs. So yes, it's true that you won't have mortgage insurance if you put down 20%. It's highly unlikely that's the buyer that we're talking about on this webinar, right? We're talking about somebody who's trying to get, 3.5%, 5% down so they can get into a home. So some of your state agencies have first mortgage products that offer reduced or below market mortgage insurance costs because they can offer those unique mortgage products. So those are at least two ways where you can impact mortgage insurance.
Great. And then lastly, this is with respect to MCCs. Can the cert be reissued if the loan is modified?
That's going to be a very program specific requirement. I wouldn't want to answer that right now and get it wrong. It's going to depend on where you are, if there is one, if you're allowed to reissue, and then under what circumstances you may do so. A loan modification, I suspect in most cases, that's actually going to come down to a negotiation between the buyer, the owner, whose loan is being modified, and the mortgage certificate holder.
Thank you, Sean.
All right, Tracy, what do you have?
Hey, Sean. They have gone over the majority of the things that I feel like we keep getting, but another thing is that I see often and have often answered on here is asking about the turnaround time with using DPAs, and if that extends the process or how much time is needed for that.
So there's two factors there. One is the program. Most DPA programs don't require extra time. Where the extra time is needed is with a loan officer who doesn't know how to do the DPA or is inexperienced with a given program, or some delay occurs, like everybody forgot to do the homebuyer education class. The most important thing you can do to ensure an on-time closing in line with any other type of transaction is to work with a loan officer who knows these programs or is willing to get to know them for you and understands the process, understands the nuances of that program, the timeline, the requirements. Do they have to take a class? How and when do I lock? So on and so forth. If you're working with a loan officer that knows these programs well, guys, I hear it day in, day out, week in, week out. Those loan officers tell me, if you said 30 days, we're closing in 30 days. I don't care if you put 20% down or if it's FHA with a down payment assistance. That's how good a good DPA loan officer is. they'll keep everybody working on the same timeline, and they know how to do the DPA. So for the most part, most DPAs will not extend the transaction. Now, there's always an outlier to every rule, right? There are some DPAs that will require a little bit of extra time. Maybe it's a local nonprofit. They don't have all the resources and they need a few days or a week to review the file. That is what it is. But as long as your LO knows that and you know that going into it, then it's not a matter of delay. It's a matter of building in the amount of time that you need, right? So I would also encourage you to think about down payment assistance this way. If you have clients that can't buy without it, you're not delaying a transaction. You're creating one when you use the down payment assistance program. So I'll leave it at that to answer that question, but good question. Anything else, Tracy?
No, nothing else to bring up specifically. I think we still have a few questions in here in Q&A, so I don't know if you want to grab any of those and look at them, but the three of us are still just kind of commenting on those.
Okay, so yeah. Oh, sorry, go ahead, Will.
No, sorry. One thing, Sean, if there are any individuals here that are interested in learning a little bit more about how to navigate through, Down Payment Connect. I know we have a lot of questions today, but what's the best resource for them if they need to reach out, or what else we have available for them?
Yeah, so we can, Mel, I don't know if you can put a link maybe to our most recent Down Payment Connect webinar and maybe throw that in the chat. And then we have a rotating series of webinars every month. And every couple months, we do a Down Payment Connect webinar that is all about how to use that tool, how your peers are using that tool, examples from websites, Instagram, Facebook, blogs, email campaigns, flyers, it's just all manner of examples of how a Down Payment Connect is used. So we'll put a link in the chat to the most recent recorded version of that webinar. And then we encourage you to go to downpaymentresource.com/education and keep up with our schedule and sign up for the next version of that. So I think what I'll do here is I see some more questions. Actually, there are a lot. Let me do this. Just for our audience, there's no way we're going to be able to get through all these questions. So our contact information is up on the screen, info@downpaymentresource.com. I'm just going to quickly, rapidly go through some of what I see lingering in the Q&A. We'll try to fire off some quick answers for you here. Patrick asks, is there an issue with locking rates? I'm hearing lenders are not able to lock. Patrick, that's going to depend on the program. As you've seen in the market, interest rates are super volatile. That does have an impact on some DPA programs that are based on rate or that premium price their DPA. The DPA providers are trying to deal with that volatility. Their investment banks are trying to deal with that volatility. That gets obviously filtered down to the loan officer and the lender. So there may be some challenges. Rates are super crazy the last several months. Fed just raised the Fed rate again. So we'll see how that impacts mortgage rates, but that can cause blips too. So yeah, there may be some interest rate volatility. It's just it's the nature of the market right now. Cynthia asks, can you show how the consumer I send to the site signed up that they know that is my DPA link? Cynthia, if you're talking about Down Payment Connect, if you send them your link, it's yours. The only thing they can do is connect with you if they complete a search. If I misunderstood that question, then let me know. Sorry. Let's see. David asks, he's with MLS PIN. Yes, I believe on your MLS dashboard, you'll see a link to Down Payment Resource. David, you have all kinds of tools there, as does anyone else. In fact, I will put the list of our MLS customers up on the screen. Here you go. If you are a member of one of these MLSs, look for the down payment buttons on listings, but also go to your MLS dashboard in your tools or partners menu and click on Down Payment Resource to get your free Down Payment Connect link. Let's see. Adriana asks, so can only loan officers get the eligibility widget? No, agents can do it too. You already have it if you're a member of one of these MLSs. Anyone else can go to downpaymentresource.com/DPC and subscribe if they don't already have it for free through their MLS. Will there be an MLS search feature where we can search for the down payment link? Eric, yes, some MLSs, if you're talking about searching for listings that are DPA eligible, then yes, some of your MLSs have put that filter in the residential search filters. But remember too that up to a certain price point, depending on your market, just about any home is going to be eligible for help until you start getting to maximum purchase price limits in that market. Let's see. Adon asks, how would someone selling their house make their home DPA eligible? They don't have to do anything. So the thing is, it's about address and price. So Adon, basically, we look at where that home is and which programs are available in that area. And then once they decide on a list price, then we look at all the programs available where they haven't exceeded the purchase price limits of those programs with their list price. So the seller doesn't have to do anything, but you bring up a great point, Adon. If you are looking at listing a house, this is a great way to attract more attention to that house. I'm sure all of you are looking to do that right now with listings, right? Certainly in a lot of markets. So if you want to attract more attention to the house, identify the DPAs that are available for that property and market that property as, DPA eligible, and show them maybe some information about some of the programs that are out there. That's a great way to generate more interest, more eyeballs, and more foot traffic on that listing. Let's see. Kristen asks, how do you get the Down Payment Connect page if you are a referral partner? I'm not sure exactly what that means. If you're a loan officer, you can subscribe to the URL here on the screen. If you're an agent and you're a member of our MLS partners, log into your MLS dashboard, click on Down Payment Resource, and go get your link. If that doesn't cover it, Kristen, let me know. Let's see. Eric, we covered MLS PIN. Let's see. My MLS, CRMLS is a partner of Down Payment Resource. Where do I go to get my landing page? George, so log into Matrix or Paragon, depending on which system you use. And from the dashboard there, you'll see a link in the tools menu or the third-party partners menu to Down Payment Resource. Click on that. Your Down Payment Connect page is waiting for you. Let's see. Pam, hello, Pam. How do we find wholesale lenders that provide DPA programs? So if you subscribe to Down Payment Connect as a loan officer, then you will get a directory of all of the programs available in your footprint, including there are some broker DPAs that are exclusively for brokers through wholesale lenders. And we also do our best to track and identify which programs are allowed through wholesale channels. We will also have some new filters coming to you soon if you're a DPC subscriber and a loan officer that will better enable you to kind of come up with programs that meet your needs, that fit your appetite. Let's see. I'll go for a couple more minutes here. Megumi asks, do all listings eligible for DPA have DPA icons? Yes. I'm wondering which MLS you're a member of, Megumi. There may be a technical issue somewhere or something if you're not seeing it, but yes, all eligible listings would have a DPA icon if you are a member of one of our partner MLSs. Let's see, how do we get our clients started? Martha, connect them with your lending partner. First of all, have a conversation about financing and down payment. Make sure they're not giving up because they think that they can't get a down payment. Then have them get with a loan officer, discuss cash to close, discuss down payment requirements, discuss down payment assistance solutions, and get them pre-approved. Let's see. Andriana asks, if a homeowner later puts the home into a trust, that is generally a transfer of title, so to speak. So would that consider a trigger? Would that trigger the payback of a DPA? Andriana, we're getting into extreme outliers here. You're right, that would generally be considered a transfer. I suspect that scenario might trigger a DPA payback if the DPA was not a grant upfront or forgivable incrementally before they got to that transfer of title. So again, I think that's going to be a very unique scenario specific to the program, and you'd want to identify the program they used and maybe contact that program provider just to make sure they went about it the way that they wanted or needed to. Let's see, Lucy asks, is there a loan officer list of LOs who specialize with DPA programs? Yes, So several times we've gone through different ways to find loan officers. Go to downpaymentresource.com, do a search, find a program, click the details of that program. First thing we show you is who the loan officers are. Or ask your peers, or go to the program provider's website or call them. We give you their contact info. Ask them who's doing DPAs in their market. Talk to your broker, talk to your peers, ask them which loan officers they use. Those are all various ways where you can come up with loan officers who do these programs. Also, feel free to join Down Payment Insiders and network there. Let's see. I tell you what, I'm going to pause here. We're still getting a ton of questions. This is great, guys. We appreciate it. Let's see. I think we'll probably go ahead and call it here because we're over our time. If you have any further questions, reach out to us at info@downpaymentresource.com. Let me put that on the screen here. We did record this. We will send this recording to you. Thank you all for joining. We still have a huge audience here, and I know there are still questions coming in, but to be respectful of your time, we'll just give you our contact information. If you have further questions, reach out to us that way. We'll give you, along with the recording, some additional resources, including access to our webinars, so you can follow on with the next in the series. This is sort of part one of a 4-part series. The next one is how does DPR work? How does Down Payment Connect work? We have one called Those Darn DPAs, where we explore some of the challenges and obstacles with using down payment assistance programs and how to overcome them. So thank you all for joining. Have a wonderful day. Reach out to us at info@downpaymentresource.com for any further needs. Thank you.